Today, we will be reviewing the Axion Expert Advisor by Mr. Vladimir Mametov. Stick around to the end to receive a free expert advisor from us at Prosperity Algo Solutions. So this is a very interesting EA as it trades a whole barrage of currencies simultaneously. So those include anything from the Euro USD all the way to the NZD JPY. And not only does it do that, it supposedly uses one single high accuracy strategy and that's compatible with multiple different time frames. And at the same time, it kind of diversifies itself to a certain extent by spreading out the number of trades across a whole variety of different currencies with a relatively small lot size. And here it says that the advisor supports both hedging and netting accounts. Okay, so you don't necessarily need to take both longs and shorts simultaneously. It works with any leverage, which is also quite interesting because sometimes if you see more of a martingale type expert advisor, they will specifically tell you to take on very high leverage accounts, because for a martingale, to avoid getting margin called if you go deep into drawdown, you require a lot of margin so that you're able to open up larger and larger lot sizes. And in terms of strategy, it says the advisor uses pending orders to enter the market, and profitable orders are automatically closed at the take profit level, while losing orders can be closed by stop loss or maximum drawdown. So perhaps there's some sort of like equity stop loss or recovery mechanism going on here. And the advisor, the developer, also states that all orders are open with the same size and there's no risky strategies such as grid or martingale. So all very interesting facts to look at. And we can actually pop over now to the signal page to get a bit of a better idea of how this system works. And so far we can see a very nice equity curve where it has made 34% returns in the month of November. But as we can see, the initial deposit was extremely small, so perhaps the developer just used you can't blame them either for this, but on MQL5 on the marketplace, quite often you will see people put in very small size and use high leverage in order to get these very impressive return metrics. But keep in mind that leverage, you can always scale up or scale down. It's not magic to just use high leverage, so you should look more at like the stability of the equity curve than just the pure return metrics. And if we look at trading history, to the developer's point, it is trading a whole variety of different currency pairs. And also really interesting, to my earlier point, it's actually not necessarily taking enormous size. It's taking just tons and tons of small orders, and it's taking both losses and wins. So this is actually looking quite interesting. Okay. As here we're seeing it is taking losers, but it's also taking lots and lots of winners. And let's check for some grid. So here we go. We can see that it's not quite a martingale, but there is a degree of grid happening. So when it's about to take a loss, it opens another position and they both close at the same time. So here we can see every time there's a loss, it's followed by another trade or a series of other trades which close at the same time. And that's what's giving us that smooth equity curve. So Euro GBP, we were about to take a loss, and then we open 1, 2, 3 more trades, which all close at the same time. Here as well, about to take a loss, or 1 and 2, they kind of go together. So this was a two-prong grid. So there might be a bit of grid going on actually. So just something to keep in mind. There's no like exponential sizing of lots, but there is there does appear to be some sort of recovery mechanism happening. Because loss, win, win. And now let's look for, just to kind of confirm this hypothesis, let's look for one which closes in and of by itself. So a good trick is something I'd recommend you guys to do is look at the time of when the orders are closing and then contrast pure winners with when there's a winner and some losers. So to give you an example, Here, we can see that the Euro USD, there's only one trade that closes at this time because it's a winner. And then same thing here, Euro USD, one trade because it's a winner. But then here, here there's two winners. Okay, bad example. But here, for instance, we can see there's one loser and there's one winner and they close simultaneously. So there might just be like some element of a recovery mechanism going on. But with any point, we can also download it here in MT5 and run a quick back test. And we are seeing here that there is a nice equity curve. I ran it on the Euro USD specifically, but it would be trading a whole variety of different currency pairs. And we are seeing a detachment of the equity from the balanced line. So this could denote that there is some degree of recovery mechanism happening. We can also see here in the chart that when price goes away from it, it waits for it to retract and then it opens another order and then they close simultaneously here at the same point. So it's not a true grid in the purest sense, but it does appear to have a recovery element to it. So it doesn't, like a traditional grid would open down here once you reach a certain distance from the initial order, but this one actually waits for a retracement and then it opens another position which closes at the same spot. And here too, it doesn't open up here, it waits for it to pull back and then it closes. So it's quite cool actually. Let's just keep scrolling to see if we can get a better idea of how it works. And similar thing here, open two orders, closed at a similar spot. And a breakout there. Let's run a visual back test after taking a look at these inputs in order to get even a better idea of the strategy. And we can see that they allow you to take both longs and shorts. It trades a variety of different time frames simultaneously. And there are both filters. I wouldn't be surprised if it's an ATR filter. And there's also an equity stop loss here. Let's run a visual back test. Oh, okay, we're off. So most of the trades are, like these ones have been successful to date. And it's using limit orders to enter the market. So there is an aspect of pending orders happening. And it appears to be a high win rate system too. If we go in the daily chart to get a bit of a better idea, it's placing pending orders at levels. So they could be areas of support or resistance or areas of previous minimas or maximas. So the daily chart doesn't give us a great indication, but if we go, let's go to the hourly chart for instance, these look like previous minima and maxima levels on different time frames. So very legitimate strategy, probably more of a breakout type. So breakout with pending orders, that's a stop order there. So it's a bi-directional breakout system using both limits and stop orders, trading a variety of currency pairs. So there is indeed a legitimate strategy here. And to the developer's point, there's no scaling of lot sizing. However, there is still like a mini grid mechanism happening. The one thing which we should be careful for is, even if there's no scaling of lot sizing, do they significantly increase the number of orders? So let's run it here. Now, these close at the same period. But something to kind of keep an eye out for. Sometimes developers, they won't scale the lot sizing, but they'll just open a ton of orders which close at the same time. And this enables you to say like, oh no, there's no martingale effect. But there is, like, in effect, if you just have 10 times 0.1 lots, it's the same thing as just scaling to one lot, right? So you have to be a bit cognizant of that trick. But from what I can see here, it doesn't trade a whole lot. There is some degree of recovery happening because every time there's a loss, there's a corresponding trade which closes at the same time. So my conclusion, just to wrap up this video before it gets too long, is there is a real strategy here. There is a degree of recovery mechanism. However, it does not appear to be an extremely aggressive lot scaling size. The one thing that I would keep an eye out for is because there is a because there is a recovery mechanism and there is a detachment from the equity and balance lines, that could be a little bit challenging in the event of a run. And if you couple that with the fact that this thing is trading a ton of pairs, you start to increase your odds of perhaps entering a drawdown period. So like, let's say if you have a significantly longer trend, that can sometimes cause like recovery type bots to like malfunction or to not know how to deal with a long period of trending price action. And if you're trading 20 something pairs simultaneously, your odds of having a period of price action in one of the pairs, which causes your recovery mechanism to break, is significantly higher. So you always have to be careful about combining recovery or martingale with a ton of different pairs, because your odds of having a run which causes a blow up becomes significantly higher. That being said, this does appear to be an honest, solid system. There is something here, but I would be curious to maybe let the live signal run for a few more months just to get a bit more indication of how it actually works. But I'd love to hear from you guys in the comments if you've had different experiences. So yeah, let me know and have a great day. Before you click away, if you're looking to get a real expert advisor, here at Prosperity Algo Solutions, we're currently offering our Golden Time Bomb system, based on automating the London breakout and opening range breakout 100% for free. Watch the pinned video to find out more and to get access.